Good afternoon to all participants, and thanks for taking out time and joining us for Q3 FY24 earning call. Today's call and discussions and answer given may include forward-looking statement based on our current business expectations that must be viewed in conjunction with the risk that pharmaceutical business faces. Our actual future financial performance may differ from what is projected and perceived. You may use your own judgment on the information given during the call. Our domestic formulation business has delivered 11% growth for the quarter, and we are ranked as the 16th Indian pharma company as met December 23. Market-beating growth in both acute and chronic therapies are achieved for this quarter. The chronic market growth was 11%. It has grown by almost around 15.9%. And on acute segment, market growth was 9.1%, and IPCA has achieved almost around 11.3%. This is as per IQVIA Met December 2023. With 2-rank jump over corresponding period, IPCA is 13th in acute segment, and IPCA has maintained its rank in the chronic segment. IPCA's market share has improved to 1.9%, Met December 23, as against 1.89% in December 22. So from 1.89, it has gone to 1.95. Our export formulation business has delivered growth of around 8% for the quarter, from 400 crore to around 433 crore. The branded formulation business in ROW declined from 128 crore to 105 crore. This is mainly due to certain shipment could not go to the CIS market. Myanmar business is impacted because there are issues and licenses are getting delayed for a long period of time. Without import licenses in that country, shipment cannot go. And certain business of West Africa affected for two reasons. One is Red Sea reason, and another some kind of slowness in the market also. So because of that, the branded business in this quarter is down. Institutional anti-malarial business has declined from 77 crore to 77 crore from 83 crore in the same quarter last financial year. Export generics business in UK and other markets has delivered growth of around 33%, from 189 crore to around 252 crore. So overall, the generic the export formulation business has grown by around 8%. API business declined from 329 crore to around 285 crore for this quarter. So we continue to face volume decline in certain API, but pricings are now getting stabilized. On margin front, on standalone basis, EBITDA margin improved by around 2.78% to around 18.55% for the quarter, from 15.77% in the corresponding period of last financial year. The material cost to sales ratio also improved by 2.65% for and also in the current first 9 months of the current year. So overall, material cost to sales ratio from 34.86%, it has come down to around 32.21%. Both shipping costs and energy costs prices has moderated as against prevailing prices in December 22 last financial year. And we are also witnessing a price stability on majority of our procurement. Consolidated EBITDA margin before exchange gain loss or exceptional income has gone up by 1.12% during the quarter. From 15%, it has moved to around 16.12%. Consolidated material cost to operational income has improved by around 2.39% from 36.34% to 33.95% for the quarter. Having given the broad numbers, now I request participants to ask questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, good afternoon, sir, and thank you for the opportunity. So the first one on now that we have had a full quarter with Unichem, what are your updated thoughts on synergies that we can generate in terms of, call it quantitative synergies over the next 2 years, and what are the primary drivers that you see, to generate those synergies? And then consequently, what that can lead to our total profitability.
So we are working on a lot of things as we had discussed earlier, like the market extensions, the improvement in the processes of the APIs, and improving the overall productions and productivity at the Unichem and all those, and cost reductions and all those kind of things. And also to scale up their production. So you can witness that their total income in the current year in the first is almost growing 40% plus, and in this quarter also, the overall top line has grown by around 43.6%. So their productivity definitely are improving now, and as far as a lot of those activities are concerned, it's a lot of there is, for everything there are timetable, and it takes a lot of time because regulatory filings and so many things are involved. So that process is going on, and the even cost reduction process and everything is going on. It will take some time, but the improvements are seen in the results now. For the Q3, they have achieved almost around 38 crore kind of EBITDA numbers, 8.8%, and the company which was incurring losses has now shown some kind of PBT in the current quarter also, almost around 16 crore before the exceptional income. So they are on right track, and we are confident that the company will make profitable as we have discussed earlier.
But sir, any quantitative number as to where their margins, annual margins could end up in the next 2 years with all that we have, in place now, the entire plan that we have in place?
It all depends on how the journey is being taken up, because there are many things where the regulatory approvals and all are required. Even if processes are changed, processes need to be again refiled. Then after approval only they can be let's say commercialized, and all those kind of things are there. So giving quarter-wise numbers and all may not be right now feasible, but yes, what we have talked earlier, that 2,000 crore turnover and 300 crore kind of 15% kind of EBITDA margin, that's very much achievable. We are very confident that every day after day, when we are looking into and seeing the progress, we feel that we are on the right path here.
Sure, sir. And the second one on the generics business, which has seen a lot of growth, 33% year on year. Is there any one-off kind of component? How should we look at that business, let's say next quarter and probably next year?
Generic business, if you look at in last 3 quarters on continuous basis, that has done the similar kind of growth. And in fact, at the beginning of the year, we were looking that generic business may not grow that much because of we have lost certain kind of businesses in South Africa, but we are in South Africa also we are growing, and we were expecting almost around 40-50 crore kind of losses, but we are looking that the South Africa business is also moving up. In current year also, I think in first 9 months it has grown by almost around 12%. So there are no decline. Europe business is also going on very well. The Europe has seen good growth in first three quarters in the current year, and overall it's grown from 240 crore to almost around 371 crore, almost around 54% growth. there are a lot of products which are yet to be launched in UK. So that business will continue to have growth, good growth. Only concern is little bit on this Red Sea level and certain customers postponing some kind of shipment and all those kind of things till the time freight is going to be normalized. And in time to come from maybe in first quarter of the next financial year, some kind of US products will shipment and marketing will start. So overall generic business should be growing well for us in time to come.
Sure, sir. And one more with your permission on the US products, can you provide incremental update as to where are we? You suggested that we might do some shipping, but what would be the potential upside from that shipping that will start in quarter one, and then how are you looking at the number of products that you will start shipping starting from quarter one FY25 to the end of FY25?
I think overall, what we have worked out that there are a lot of products where some kind of work needs to be done with reference to, because in US we are coming after a long number of years, 2014 to now. So some kind of processes have changed of API and all those. There are some processes where the post-approval are required, which have 6 months time, and some pre-approvals are required. So all those kind of things are there. But I think overall, looking at we feel that almost around 8 product or 9 product can be launched in the next 12 months. That's what is feasible, and thereafter whatever the process upgradations or somewhere the site changes are there, and all those things will take time. So over a period of 2 years, I think it's possible to launch around 16-17 product kind of number. So that's how it's a journey now. There's a lot of validations and all those need to be taken, and also it will take some time. It's not that everything can be done together. So it's over a period of time, say in current year, 7 to 8 product definitely can be launched. Yeah.
Sure, sir. Thank you and all the best.
Thank you. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, good afternoon, and thank you for the opportunity. So my first question is on branded market. So you obviously mentioned some regions which has impacted performance during the quarter. So how should we look at this business, say from next 2 to 3 quarters perspective?
Overall, see, our expectation from this business from next financial year could be around 10% kind of growth, and current year it may grow around by 8%. Yeah.
Okay, but some of the challenges which you mentioned, that remains in near term, right? And then maybe it will take some time for those to settle.
Yes. But in spite of those difficulties, the business could grow around 10%.
10%, okay. And sir, you mentioned, say, like Red Sea situation, etc. But one of the commentary you also mentioned that feed costs are down, or feed costs are moderated year on year. But I think what we are hearing that logistic costs are going up, etc. So how should we look at your operating costs, especially feed, etc. Again from near-term perspective?
That freight cost comment I have given only with reference to that last year. What kind of prevailing rates were there? Compared to that, the rates are significantly lower, and that even if it's a little bit the logistic cost goes high, it may not have much of impact on overall profitability and all.
So you don't expect much impact from these higher freight costs, etc.
Yeah.
Should we?
Only certain European customers are postponing the shipment, but now let's say Houthi attacks has come down and things may normalize again. That's what. Yeah. Last few days we have not heard any kind of those attacks. Yeah.
Okay, sir. And my last question is, can you provide an update on some of the new plant expansion, etc., which you're doing, say, Devas, Nagpur, etc., and how soon these plants will start contributing to your numbers?
Say Devas almost around 7 to 8 product commercialization work is going on. Some products are already filed with European authorities. One product approval has recently come. So it may take around 6 months time for at least 5-6 products to get approved. So thereafter your productions, regular shipments can start from Devas plant. And
like
Nagpur concerned, Nagpur, we have not done anything much on the site. We have just got we are now consent to operate. So first one intermediate, the planning is going on there, but that's for captive consumption. So nothing will add on as far as the top line is concerned. It's only some kind of reduction in the cost and all will happen. Yeah.
Okay. And sir, a clarification on the US business commentary which you earlier provided. So you are expecting that 16 to 17 products can be launched in next 2 years. Yeah. So that will give you like a good footing in the US business, given like your advantage on the cost efficiency, etc. Or you need to add on like more products to gradually come up in the US market in say next 3 years.
We have almost around a basket of around 40 products. So we are expecting good number of product approval to come. So this is from the current list I am talking, which is approved list. Yeah. So it's basically the more number of product approval will come, and with that even the more number of launches will also happen.
Okay. Okay. Thank you very much for your response.
Thank you very much. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah. Hi. Thank you for this opportunity. Sir, my first question is on the margin profile X of Unichem for this quarter. If I see that adjusting for the EBITDA margin, what we had reported for or what we had indicated for Unichem in the previous quarter, that was part of our number, and this quarter's reported number of Unichem, it looks like that the margin for IPCA has seen a kind of meaningful correction sequentially from almost like 300 basis point kind of impact. So what is this leading to? Is it the operating negative leverage that is playing out here because your export is seeing some kind of... So if you can clarify what is that is driving the margin sequentially weak for our base business?
Let's say overall, if you look at as I talked earlier, that material cost to sales ratio has improved because more value additions are there, and that improvement is almost around 2.6% kind of improvement is there on material cost, and prices are more or less 2.78% improvement. So prices are also now stabilized, so there are not much of fluctuations on my procurement prices and all. And overall, more value-added businesses are happening on formulation side, and that's giving the better margins overall. And as far as the personal cost is concerned, that's growing by around 12%, which includes around 7 to 8% kind of normal increments. And since we have added people in the field, so the personal cost is little on higher side. But your overall, if you look at your manufacturing and other expenses side, there are hardly any increase. So compared to your overall operating income to your other expenses, manufacturing other expenses, that there is a good amount of reductions is there because overall that cost has not moved up.
Yeah. Why that is correct, sir, what you said. I'm just asking that sequentially, it looks like near about 300 basis point kind of impact IPCA's base business would have seen if I adjust for the Unichem numbers. So sequentially, what would be driving or dampening the margins, sir?
The margin improvement will continue. Let's say that with the overall growth picking up, right now, say in the current quarter, growth was low. And from next year onwards, I think we should be continuously growing by around 10 to 12% kind of growth. So at that level, the margin level will further improve by around 1.5%. And when we add the US business, margin will, because capacity utilizations will add. So that also will add to the margin over and above this normal margin.
Okay.
So we feel that overall EBITDA margins will definitely move by around 2% point plus kind of things, in next financial year. Yeah.
Okay. Sir, with your permission, can I just ask about Unichem also here? Because the margin performance for this quarter, what we see here in Unichem, around 15% plus or 15% around. So I think it is already reached to your guided level, almost nearer to that. So is it fair to believe that the margin expansion, what you have been targeting with the initial kind of corrective measures, the full benefit of that flown into Unichem, and whether we have seen any of the benefit of integration for IPCA's base business?
Let's say margin there are driven by their overall increase in overall revenue. Let's say they are growing by almost around 40% plus in the current year. And this quarter also they have grown by around 43%. And improvement in business is there across, whether it's a US business, whether it's a Brazilian business, whether it is European business, except they have suffered on ROW market business again, because Myanmar they had good business. So that is impacted, and little of their Russia business is impacted. So, but and even their the CRAMS business is also the contract manufacturing business is also done well. So overall, let's say the overall productivity there are improving, and the overall top line growth has been good. Now, as far as margins are concerned, in Q3, I think EBITDA margin has been around 8.8%. So they were around 3-4% from there. They have come to 8.8%. It's not around 15%, because there is some kind of exceptional income is there. So that you need to exclude. So and in our, I think Unichem in P&L account that has declared separately, because that is on sale of the residual shares which they had of the Optimus, which they have disposed of, and almost around 68 crore kind of surplus has come. So that has been shown as exceptional income. So overall margins has not reached to the what level, and what kind of improvement which we are looking at Unichem, they will take time, because processes, when they are corrected, they need to be filed with the regulator. Then after that, based on that, you need to do take approval. After regulatory approval, you take again the formulation batches, put them on stability. After you put the stability, then again file with regulator, take their approval, and then those revised processes become effective in your formulation. So it's a journey. It cannot happen in over a period of 3 to 6 months time. It take a long time. So maybe 1 year, 1.5 years, and all those kind of things. So I would say that those kind of improvements will come in time to come. So it's currently the margin improvements are because in Q3 22-23 they had negative margins of around 14.1%. EBITDA was that kind of negative margins were there, and they were in losses. Almost, I think third quarter last financial year they had almost around 60 crore kind of losses was there.
Correct.
From there they have come to the profit, and margins have started improving. So what we are seeing is only the improvement in operations, little bit on overhead side, little on cost side, improvement in productivity side, and improvement in business. That has resulted in some margin.
Okay, sure, sir.
Yeah.
So
and that journey will continue.
Sure, sir. My next question is on the US business front. So you mentioned that some sort of supply commencement to US can start starting first quarter FY25.
Yeah.
But knowing the fact that the activation of the dossiers could take a longer time, even the process has to be updated. So the procedural aspect itself will take around 12 months or so. So then on what basis that we are saying the
so we have done the working almost around seven products. We need not to do much.
Okay.
So that's our updated dossiers are there. So these 7 products can, say currently I have 21 approval. Out of these 7 products can go. So that in a phased manner these products will be launched. Initially I think 2 or 3 product production is already going on. So they would be shipped somewhere in the first quarter of the current year, and the market launch will happen in first quarter of current year. The shipment from here may take an early part of the first quarter of next financial year. And the other products are somewhere there are site changes are there, somewhere there are post-approval are there, somewhere pre-approvals are there, somewhere the new processes need to be incorporated, and all those works are there. Plus we expect we have almost around a good number of more than 20 more filings which are there, where everything is, a lot of review has already happened, and in a phased manner those approvals will come. So based on that, I'm telling that around 15 to 17 products can be launched over a period of 2 years' time.
Okay. Just last one question, sir, from my side. So far as the domestic formulation performance going ahead is concerned, let's say FY25, obviously we have seen a double-digit growth, better than the industry growth, IPM growth in the current financial year so far. Knowing the fact that around slightly more than 20% of our portfolio possibly is part of NELM based, and the limited scope of taking price rise there, and the volume growth trend what we are seeing currently. So is it possible to continue a double-digit kind of a growth for next year as well?
Let's say NLM did not impact much in current year also, because there was a good amount of price rise was there on NLM, but similar kind of reduction was there few months back because of readjustment of prices on re-averaging and all. So on NLM product, in fact, there is hardly any advantage, or even if there is advantage, it's only 1-2%. So there was hardly much of the advantage was not there.
Okay.
So, and what we have seen in current year is that your acute portfolio growth in the market is low. So it's a very exceptional year. So, and acute side, the growth should pick up in next financial year. And on chronic side, market has started reporting double-digit growth now. So overall, we see that from 11 to 12% growth, what current level we have, it should be possible to increase the overall growth to around 13-14% in domestic market. Yeah.
Sure, sir. Yeah. Thank you, sir. Wish you all the best.
Thank you. The next question is from the line of Ajay from Wealthify. Please go ahead.
Hello, am I audible?
Yeah.
Yes, sir. Thank you for giving me opportunity. So, sir, I have a question about our group companies. Since none of our group companies are doing any concalls or giving any guidance, and if you say that top line and bottom line from last few quarters are almost stagnant and also into losses, so can you please provide any update around our subsidiary performance like of Krebs and Leica and Makers Laboratories?
Makers has nothing to do with IPCA. IPCA doesn't have any kind of holding in Makers. It's an independent company. Then as far as Leica is concerned, their business growth is good. They have overall they would be doing better, I think, overall. Their plant is under shutdown little bit because of upgradations and all. So that is also getting completed. Your whole renovation part is going to complete in first quarter of the current year, and thereafter validations and filings of those years and all will happen in the developed market and all. So that journey is going very well. In spite of all those kind of things, they have performed reasonably well. And they also hired almost around 100 people in current year to do the direct marketing of their injectables in the market. And that business is also now giving good results to them now. And In fact, they can add more number of people in next financial year. So overall, we are seeing a good journey for as far as Lyka is concerned. As far as Unichem is concerned, from losses, they have started now performing, and we have already said that it's possible to achieve almost around 2,000 crore turnover there, and a significant improvement in the EBITDA margin from current level. So these are the listed companies. As far as Krebs is concerned, there are good improvement there. The losses are reducing now, and some more products validations and all are going on there. Some products on intermediate side are getting approved in our dossier. So once that happens, their volume will also pick up. So we are seeing good improvement in Krebs also. But it will take time. It's not till the time those approval comes, even though you have validated process, you can't use those kind of intermediate and use those capacities and all. So those issues are there. But overall, let's say there are overall improvement in all operations. Onyx is giving good returns, good profitability is there. Your Tropic Wellness has done good business on selling the nutraceuticals, and their business is also in good profitability overall. So there are, except let's say your somewhere I think the Bayshore, which is a setup which was set up for marketing of IPCA products. So now that setup is no longer required because Unichem will be doing the marketing because that's a much bigger setup. So Bayshore will overall maybe that business will get overall merged with with the Unichem business, and also that team synchronizations and all that work is going on, and certain costs will there also will come down. So overall, there are not much of concerns in your associate and subsidiary kind of businesses.
Thank you, sir. Thank you for update.
Thank you. The next question is from the line of Ashish from JM Mutual Funds. Please go ahead. Mr. Ashish, your line is...
Yeah, am I audible?
Yes.
Yeah. So on this API thing, since we have this Devas facility also coming in, but globally there's some price pressure on the APIs. We have heard from some of the channel checks. In terms of our realization, like what products we might have selected for from Devas versus then and versus now, how are the product prices behaved?
As far as Devas products are concerned, it's only the products are getting transferred from Ratlam, and Ratlam we are creating the surplus capacity so that the products which are required for captive consumption for our US business, that can be accommodated. So it's not a newer kind of products to be launched, and the newer products are maybe few. It's more of a site transfer from Ratlam to Devas, and those kind of products are there. And there are the price stability is there on those kind of products, except the sartans where we have seen significant kind of price reduction, but otherwise the prices are stabilized now. There are not much concern on as far as the prices of API is concerned currently. From these levels, they are not going down. Yeah.
Fair enough. So secondly, on the US, since we are in the process of starting up the business, so like so prior to the 2013-14 level, we used to do around $30 to $40 million in US business, and there was this one product, Toprol, which was Metoprolol. So all those engagements, like we used to supply Toprol to AstraZeneca and some other players, I guess. So all those engagements will restart, or you feel you'll have to make a fresh start?
Let's say practically all those kind of businesses, because has completely come, is US related. There is no shipment of API to any formulators for US in last 10 years. So we have restarted all those kind of talk that wherever is possible to get those kind of business once again. But it's a time-consuming thing again, because a lot of places our processes also change, so we need to update those kind of parties with revised sampling, and then the approvals and all those things are there. So API business will be little slower to start with for US, but API for captive consumptions will come from Ratlam. So Ratlam capacities which is getting freed by shifting of products to Devas will be utilized for the purpose of our captive consumption more. And and API business, if you look at now for next financial year, we should be able to grow around 10 to 12% year on year.
Okay, fair enough. So lastly on this Unichem, so in terms of making operational changes like, putting our processes, going for the yield improvement. So where are we in the overall scheme of things? Have we achieved enough kind of success in what we were planning to do with Unichem?
If you look at their results of the third quarter and all, they have significantly improved because they were in losses, and now they have come in overall, and margins has also started improving from minus 14% in Q3 last year. It is now 8.8% kind of margin. So the operations have started improving. Their productivities have started coming. Their sales are growing by more than 40% in current year. And that is also resulting. Businesses are also improving in various markets like US, Brazil, Europe. Everywhere we have seen some kind of business improvements are there. And the Goa 2, their plants, the validation of processes are going on for the bigger products so that they have much larger capacity, but other batches they can produce. So with that, there could be a further improvement in their overall operation. As far as process changes and all those are, it's a journey. It will take time. That work is happening everywhere on market extension, process improvements, and all those kind of things. But your pharma industry being regulated, everything need a regulatory approval. Once you do a process, again go to regulators, file with them, wait for their approvals, then give the APIs or intermediates to the other formulators or all that, and then they need to again do their processes and generate stability, file, give those data to regulator, and thereafter the fructification happens. Here most of those improvements are not for sales, it's more for the captive consumption. So that journey will have to have, and it will take time. It's a maybe 1.5 year journey, but I would say that yes, this journey is happening as we have envisaged. There could be some delay here and there, but journey is happening as we have envisaged.
Just lastly, so 2 years down the line, could this be a 15-20% EBITDA margin business? Is that number achievable for Unichem?
We have guided for 15% kind of EBITDA margin.
Okay. Perfect. Thank you so much, and all the best.
Thank you. The next question is from the line of Shiva from Punartha Investment Advisors. Please go ahead.
Hello, am I audible?
Yes, Shiva, yes.
Yeah, good evening. My first question is with respect to the guidance. I mean, if I see your international business, earlier you said you were expecting a 12% growth, but now you just said that 8% is what you're expecting, and you gave the reasons. But I just want to understand for the different subsectors, what is your guidance? Are you holding it, or is there any change?
As Mr. Jain has said, generic business will continue to grow. There will be some slowness in the API business for the time being, and to some extent in the ROW branded business. The growth has been lower than what we gave projection in the beginning of the year.
So API you are lowering, and international branded you are lowering. The others you are sticking to it.
Right. And both these business should give reasonable growth in the next financial year. That is what our guidance is. So from this period on, the API business should stabilize and grow going forward.
Understood. Very good. And the other thing I just wanted to know, obviously, your generic business, Unichem is also business, is growing very strong. Just wondered if you could just add some kind of what are the major reasons behind this sudden surge in demand? Because at the start, you only said that at the start of the year, The generic you was expecting a single digit, but now it is upwards of 25%-30%. So I wanted to understand what changed in this time, and going ahead, is it a one-off or is it more structural?
No. Lot of operational changes are also made in the bargain, so their productivity has improved. Their production capacity has also improved substantially, and that has given them benefit in U.S. business. And they are also commercializing few of the new formulation for which in the past they have received approval. And few more new products will also get commercialized in the next financial year. So they also have a basket of products to be commercialized. So all that is giving benefit. And in few products, maybe because of shortage in the market also, some benefit would have come to them.
Okay. And with respect to your generic, is it more because of...
They are only into generic business, nothing else.
So your generic business also...
No, my generic business, what has happened, the UK business is growing very nicely. In fact, in first 9 months, the growth has been about 100%. European generic business has done very well. South Africa, we were looking for some degrowth, but that has also grown. So generic business, we don't see any concern as far as growth is concerned. In all the markets.
Like the next 1 year, you're looking at a very strong growth, like the runway of this, or is it this year has been a one-off exit?
On a conservative basis, we can guide anywhere between 12 to 15% growth going forward for generic business. Over and above that, whatever business will come out of US will be add-on.
Understood. Helpful. And just one small question. I wanted to understand your MR productivity. So we've seen the last quarter that there was an improvement. So if you could just update the MR productivity and what is the current strength and your plans for any additions going ahead?
Overall, MR productivity is around 4,25,000 currently. We are almost around in field around 7,000 medical reps as of now. We will be adding certain number of people in current year. That process is going on, but addition will be not more than 5% increase in the overall field force size.
Okay. So last quarter it was slightly higher, right? It was, I think, 4,60,000 was what? 4,53,000, if I'm not.
Second quarter is always most productive because of seasonality issues and all. And this quarter, because of season not being that conducive, sales are also little bit lower than what we expected. It's not nothing abnormal. Second quarter is always the best quarter in the domestic branded business.
On per man side, I think we have added almost around 20,000 rupees productivity per man in current year.
Understood. Yeah. And just there's some notification from the government with respect to that medical professionals, the kind of antiviral or anything, they should be slightly on a conservative basis. Did you feel anything on the ground, or is it more just a statement from the government?
Pardon, we didn't make out what is your question actually.
There was some news that the government officials have told the medical representatives to be slightly on a conservative basis in prescribing pain or anything with respect to the acute pain.
No, we have not seen any impact, anything like that in the marketplace. No.
Okay. Helpful. Okay. Thank you. And all the best. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, for the products which you mentioned, 16 to 7 launches which you will be doing in the US business, that will be through Unichem. I mean, the sales will be the part of Unichem, and will that be included in subsidiary, or it will be part of generic business?
Rashmi, earlier what was happening, I was manufacturing and I was selling it to my marketing partner, right? We had 2-3 marketing partners in the US on profit sharing basis. Now what will happen, we will manufacture and sell to Unichem US. So sales will get booked in my books also and in their books also. In any case, their books will get consolidated ultimately with my books. So there is no change because manufacturing IPCA will do Only they will do selling and distribution. That's all.
Marketing. Understood.
That is correct. Right.
Okay. That is one thing. And second thing, in the India business, if you can give little bit color on how your paint segment has performed during the quarter, even Zerodol, if you can, tell us about the performance.
Overall, paint portfolio in current year has grown by around 12%. This quarter, paint segment growth is little lower at around 8 to 9% kind of thing. But overall, let's say therapeutic-wise, on cardiovasculars in current year, we have grown by around 13%. Then antibacterials growth is low at around 3%. CNS around 20%. Derma around 19%. Urology around 24%. Ophthalmology around 17% kind of growth. And others maybe around 8-9%. So overall, that's broadly the year numbers in various therapeutical area performance.
And your product Zerodol is still contributing significantly and it is growing double digit?
Current year Zerodol growth is around, say around 8 to 9%.
Okay. In the range of 8 to 9%. Understood. And, one more question on this Unichem consolidation. How much would be the amortization that would be recognized due to this acquisition? Annual amortization?
It is a investment. There is no amortization. Earlier, what was happening, all acquisition cost used to get capitalized. Now, all acquisition cost gets debited to P&L. That is why that 40 crore debit has come in the second quarter. Otherwise, all is investment. So we purchase share and give consideration. So there is nothing to be amortized over a period of time.
Okay, sir. Thank you. That is very helpful. That's it from my side.
Yeah. Thank you. Thank you, Rashmi.
Thank you very much. Participants, you may press star and 1 to ask a question. The next question is from the line of Mukherjee Sayon from Nomura. Please go ahead.
Thanks for taking my question. So just on Unichem, your guidance of 2,000 crore and 15% EBITDA margin, 300 crores EBITDA. What's the timeline for that you are looking at?
FY26.
And sir, with the process changes and market extensions, which is probably slightly longer term, how should we think about growth and margin for Unichem from a slightly longer term perspective?
Shayan, as far as this market expansion and change in sourcing, it's a regulatory business and it will take time. So the margin expansion will continue over a period of time. But immediate near future, whatever we can do, that is what guidance we have given over next 2 years.
Okay. And sir, any assessment on the US revenues for the next 2 years with 15, 17 products that you would be launching in the market?
It is too early to give any guidance. See, nobody is waiting for your product. Even though I have cost competency, I will have to again relaunch product one by one and go on taking market share. There are only 3-4 customers who matter in this business, very well. So, and they are already sourcing those products from a third party. It will take some time, but we are confident because of our processes in the API and our cost competency, we will certainly do well in the US market with service our formulations going forward.
Okay. And so, when you mentioned 13-14% kind of a growth in India, what's your assessment on how much is price and volume mix in this growth expectation?
Around 4-5% price increase and rest are all volume.
Oh, okay.
This year the growth has been little lower because of the seasonality and all. It is slightly below our expectation. Otherwise, compared to market, we continue to do well. There is no issue.
Okay, understood. Thank you.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
No, nothing. Most of the issues we have already discussed. All questions are answered. There is nothing further to add. Thank you very much.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you. Thank you, everyone. Thank you. Bye.